Hey traders, Raghee here, and what we're going to do is go over the notes in preparation for tomorrow's session of day trading. And why was I dormant today? Look, if I don't like the specific setup that we've got on an FOMC caution day, I will typically refrain from trading. Now, does a caution day mean don't trade? No, it really just means to be conservative and discerning and be very aware of the reality of Jerome Powell, the FOMC statement, the press conference, everything at 2 to 2:30 Eastern. And so your trading day is kind of pre-Powell and post-Powell. Now, I would anticipate going into Powell mostly strength, even coming out of Powell potentially strength. Well, I shouldn't say Powell, going into the FOMC specifically at 2 o'clock. Now, on an FOMC day, let's talk about this for a moment as far as the timing goes. And this is going to be something you deal with clearly once a month. So let's add some notes to this here and flesh this out. Now, as a member, you get these notes sent to you via the alerts. So remember that you can save these, you can save the hyperlinks, you can get a free Workflowy account and add this note that I've sent you to your Workflowy account so you've got it as well. All right, so again, caution day, what we want to do is we want to think about the open 9:30 to about 1:30, 2 p.m. Eastern. So about 1:30, 2 p.m. Eastern. And that's going to be what I will consider the pre-FOMC, the pre-reaction. That could be flat, it could be choppy. As a general rule, in this environment, specifically in this environment, okay, I would say that you really don't want to be bearish in front of FOMC. So bearish means short. So you don't want to be bearish or short in front of FOMC. And this timing gives you an idea of what I mean by in front of. This could include yesterday too, where if you guys were in the chat room with me, it's part of what I also added in the notes. Post FOMC. That starts with the press conference that happens 30 minutes after the FOMC event. So now we're talking about 2:30 p.m. Eastern. This is where the market tends to take profit, sell off, weaken. I mean, this is where things get a little bit more volatile. All right, so keep that in mind. You get more volatile. So you really have the tale of 2 days, two sessions in many ways, the AM and PM session, or in the case of an FOMC day, the pre and post FOMC. So if you're trading in the morning, again, we're usually trading up until the midday doldrums anyways as a cutoff, but you're especially aware of that pre-2 p.m. psychology, 2 p.m. Eastern. All right, what else do we have here? Well, one of the things that's really interesting for those of you that are wondering, well, Rog, is this a phenomena, this way the market tends to drift higher in front of the FOMC? Is this something new? Is it really only this environment? Well, it's really interesting, and I added a white paper, a PDF from the New York Federal Reserve. And the question that they were asking themselves is, what is Fed drift? Is Fed drift real? And I'll just read one line from this multi-page PDF. It's well worth reading. I have read it many years ago. And I'm going to tell you when it was published. In the past few decades, stocks in the U.S. and several other major economies have experienced large excess returns in anticipation of U.S. monetary policy decisions made at scheduled policy meetings. We refer to this phenomenon as the pre-FOMC announcement drift, or as we traders call it, the Fed drift. That is difficult to explain with standard asset pricing theory. Well, let's face it. Since the Greenspan years, the Fed is a friend to Wall Street and to stocks. This was published in September of 2011. It was updated in August of 2013. This is a phenomenon that the Fed is well aware of. So you can check out the doc. And so Fed drift is real. This concept of not really wanting to sell into this pre-FOMC idea. Really important. Post-FOMC, completely different idea, okay? So let's tackle a few other things. One of the things that I'm going to be regularly putting in the notes are the closing prices for the previous session and the daily price movement ranges, so that you guys can do the gap psychology arithmetic quickly and easily and know whether or not we have gap psychology, even if I'm not on the mic walking you guys through the day. All right. Another thing that I wanted to cover here is a comment that I get a lot, which is, Rob, is this 2008 or is this 1999? And the truth is it's both, because both ends of the spectrum in terms of the Federal Reserve have been seen. In other words, we've seen the Federal Reserve inflate an asset bubble. You know, we can talk specifically equities here. They have inflated the equities markets with the low rates and with their willingness to step in and tell the market that if we need to buy stocks, we'll find a way to do it, even if it's just buying high-yield corporate debt and junk bonds right now. We'll do it. We've got the money, courtesy of the Federal Reserve. The Treasury will get to work, and BlackRock will put that money to work. Okay. These are the things that make me feel like I'm living in some sort of alien-run sim. But that's the world we live in. So the market's pretty sure the Fed's going to continue to support prices. Well, we also know there's a tremendous amount of money that's being printed. Jay Powell was on 60 Minutes about 3 or 4 weeks ago and basically explained to 60 Minutes how it's digitally printed. They just add some zeros to the ledger, if you will, and they go buy some bonds. So we have both the asset bubble that's been inflated by the Fed, and now we have the printing. Now remember, in 2008, the Federal Reserve had TARP, right? This is not that different. TARP, PPP, whatever, we're injecting money, the inflating balance sheet. So for those of you that are wondering, which is it? It's both. It's both in like 90 days. We saw a 90-day window of basically seeing both ends of this spectrum, all right? And now, by the way, it started as 2008, and then we kind of pulled it back to the future. Now it's 99. Now it's 1999, and you can see the way the asset bubble is inflating right now. Feels, sounds, looks, trades very similar to 1999. By the way, that's a large part of what I've observed the last 14 to 21 days, and why we started to deploy this sort of bullish preference for our morning, which again, in tomorrow in the chat room when I'm with you from 9:20 to 11:30, we'll go through that process all over again, just like we did on Tuesday. All right, so with that being said, that's just some of the general notes that I am looking at. What did we get? Oh, and of course, I got to share with you all, newest member of the Horner Trading family. This is Kara, the part Catahoula, part lab, part Amstaff, all mutt, right? The Horners love their mutts, and so we love our mutts. Those are our favorites, and always a rescue. So this is our rescue puppy. We got her from the local rescue, and so yeah, newest member of the trading family. All right, let's go take a look at some charts here. Yes, the NAS is making higher highs, but one of the things that I want you guys to keep in mind, this is the NAS, this is the S&P, this is the Dow, those three specifically, is if you're frustrated waiting for a pullback that has yet to come in the broader averages, we've got to get creative, and partly that is opening up the individual indices, looking at the heavily weighted stocks, opening up the indices and looking at the heavily weighted sectors, and then the heavily weighted stocks within those sectors. And that's where we find that things that we've talked about in the room, like Dollar General. I talked about that in the premium video, I believe, and in the free video on Friday. EA Sports. We've talked about pullback buys in the XLY, in the XLC. Not all that many videos ago, I talked specifically about the IYT and NSC, UNP, KSU. And once we had the two red propulsion dots in the IYT, I said, get ready. We're getting ready to accelerate. Like, prepare yourself. We're going to see an acceleration. And sure enough, that's what we've seen. So, sometimes, especially in the futures indices lately, I'm going to have to pivot. And I'm showing you guys how I have pivoted throughout my career. It's a lot easier to pivot now that ETFs have become, passive investing has become, a bigger part of the market. It's easier to find these alternatives in the equity markets that are still weighted and will behave like our futures contracts. And this is where I've taught you guys over the past few weeks, and will continue to do it, how to trade the ETF and the individual stocks via at-the-money calls typically going out 45 to 60 days or greater on pullbacks. And you guys see it works. You know, we've had setups in the room like work. I walked you guys through work not all that long ago. Setups like the trade of the week yesterday. I was torn between Etsy and work once more. You know, so these are the kind of setups that, yeah, they might take a day or two. It's not about, you know, buying on day one and, you know, 100% return day two. But if you buy on the pullback and the market, even if the market's down, it's higher than it was yesterday, you've got an option in your account that's more valuable than it was when you bought it. Same thing with Shopify. It took a little while, right? But off it goes. And here's work. It's taking its time, but today was a really nice day for those options in work. And these are things to remember. I think, you know, if you looked at the option yesterday, I think today was like a $300 or $400 move, depending on how many, well, clearly depending on how many options you bought. I know my husband bought about 3 of these, so I think he paid $370, I think, for these. So yeah, he's up, sitting at 412 right now, $3.70 versus 412. This is sometimes where us futures traders have to pivot to when the markets are in runaway mode. And we're seeing indices definitely in runaway mode. But remember, indices are these giant things with many different components. Break the components down, find the opportunities. We'll continue to talk about this in weeks to come. But tomorrow, we're going to do some day trading. So check out the notes, check out the videos that I also attached to the notes so that you're ready for tomorrow. I've got a lot of short videos, a couple short videos, some notes. Check out Monday's notes as well. All right. And I'll see you in the chat room tomorrow.